What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are breaking down some trades and a recap of the week in the portfolio. So we'll go over a couple trades here. We're up $1,000 in this week, which is absolutely awesome in the portfolio. So if you're excited for today's video, feel free to like the video, subscribe to the channel, and always turn on those bell notifications for all future uploads. A crazy week in the stock market. Now, people are going to sit there and say, well, Fridge Financials, if you take a look at the S&P 500, it has returned a crazy amount. It's up over 3%. You only did about 1.93%. You're underperforming the S&P 500. And you're right, 100%. But, it's been along this idea of being able to be in and out of trades pretty quickly, especially this week and in the last couple of weeks here. I went cash a long time ago in April, back in Liberation Day. Was it a good idea? Obviously, in hindsight, the markets have rallied ever since back up. So am I still underperforming? Of course I am. I will fully admit that. But now I'm getting into the habit of trading stocks here and being in and out of trades, looking at positions, getting in and out, and then calling it a day here. So we went through, I believe we closed out, I'm trying to count off the top of my head here. I believe we've closed out 4 trades with a 5th one still open, which is Alibaba. This one is up already, which is absolutely awesome. So kind of break down the trades here. Now, if you've watched my previous video about the spreadsheet I look at here, this spreadsheet here bases my ideas as to how I want to invest into certain stocks. And I have some other things I want to add into the spreadsheet. Every day I'm thinking of new ideas to help give me a better visual as to stocks that are potentially undervalued based on their growth and their discounted cash flow analysis and all this kind of stuff there. So what you will see is that these are the ones that are going to be the potential buys. So up to block. So all of these right here are my potential buys that I'm not too frustrated about if I was to get into positions here with any of these stocks. Alibaba, Celsius, Chewy, CVS Help, Novo Nordisk, Supermicro, SoFi, and Block. Supermicro was actually a lower buy in this spreadsheet here, but it has since rallied like 15-20% or something like that. We'll take a look at it, obviously. But the idea behind it is using this kind of spreadsheet to give me an overall understanding as to stocks that are undervalued based on their cash flow, based on their growth for their earnings per share the next 1 year, 3 year, 5 year, and kind of just give myself a little bit of an extra room for error here, which is a margin of safety. And so far, I think it's worked pretty all right. Now, there's one stock that I traded this week that is not in this top 8 here, and we'll talk about that a little bit later on. But the ones I did trade this week that are in this top 8, Alibaba, multiple times now, CVS, and Supermicro Computers. So we'll take a look and see. We'll go into Baba first. Actually, we'll do Baba at the end because I have an open position there. So the first one that we'll look at will be CVS. And what you will see is... if it's ever gonna load. Hello? There we go. All right. I was like, Jesus, come on. So go down to CVS here. So here's my latest position I took in CVS. So again, I was trying to get filled in earlier on. I had to keep canceling over and over. Oh, no, it's me trying to close it off, I should say. So I sold this contract at $147 for a $60 strike on CVS because CVS came down recently with the breaking news of making, pharmaceutical drugs cheaper as a result of a Trump administration. I want to say it was a executive order. I'm almost certain it was, but don't quote me on that one. But so, medical stocks, pharmaceutical ones sold off. Novo Nordisk was another one that sold off. CVS sold off quite a bit. So, when stocks are red, it's a good time to sell cash care puts. When stocks are green, it's good to sell covered calls, right? So CVS came down and we sold a $60 cash care put. Now, what I did is I gave myself, a little bit of a couple weeks just in case CVS was to rebound. Maybe not this week, maybe the next week, depending on what we're looking at here. But CVS ended up having this nice rebound, as you'll take a look and see. And I was able to buy this contract back for about $73. I made about $74, basically over 50% of my overall premium here in about 3 days, which is absolutely awesome. So if we take a look at CVS for the week, So kind of sold off down to here. I went right at the money around here. Not like at the money, but it was like the 13th around here somewhere. So I got in right around $60, went right at the money for it because, again, we had this big sell-off here. And it sold off a little bit, then it had a little bit of a nice market pump back up. As a result, we were able to profit and cash in about $70 there, which is a good trade. The other one we had was Super Microcomputer, which we opened up, I believe, multiple contracts in this one here. Let's take a look. I've done it before also, as you can see here. We've sold a $26 put back in April before earnings, closed it back for basically almost max profit there. And then again, we're looking at Super Microcomputers here, $29, 3 contracts. And then we bought those 3 back. We made about almost, we made about $51 here in just a little over a week. Now, how this trade, not even a little over a week, it's actually a couple of days. How this trade really worked is that this one was opened up on Friday, May 9th at market close. And then markets pumped over weekend because of the tariff news with pausing of tariffs in China for a lot of major things. Markets rallied up, and right at market open, boom, sold these off. I wasn't going to risk anything. In this kind of market, taking profits is what I want to do. So I took profits here. Again, I made a lot of premium here as a result. I almost got, I got basically almost 60%, it looks like, give or take. I'm not really exactly sure what the numbers are here, but this one was again about another $51. Here's between CVS, $70. This was another, 50 or so. So you're looking at a little over $120 in premiums there captured as a result. The big one that I played, that a lot of people played, was United Healthcare. United Healthcare had a crazy week, being down 25% with slashing guidance, the CEO stepping down, now a potential lawsuit from the Department of Justice looking into their financials and everything else behind the scenes of that one. Earnings were awful apparently as well. So it's down like, over 60%. It was about $600 and now it's down at $287. So what we did here, and this is probably one of the better trades that we had. Oh, it's definitely one of the better trades we had of the week here, is that we sold a 250 cash secured put on May 15th for $1,090. And believe it or not, I watched it get this huge recovery at 250. I wonder if I can find it here for you guys here. Let's take a look. Yeah, right around here. Right around here is when we were looking at it. We saw this huge recovery. I bought in around here somewhere, and then it just kind of came back up. And I made $700, $715 in a matter of literally just about one day. Next day, market opens up, close it out, made another $715 there. So that was a huge momentum play that we had there. And again, the reason why is because if you take a look at United Healthcare and look at the spreadsheet here, it's red right now in terms of it has 3 of the 6 that we're looking for 4 minimum here. But again, looking down at 250, it gets pretty close to being green for the 1 year intrinsic value, for the 3 year annualized, and for the 5 year. Pretty close, almost 10% across the board here. So that's why I put it at 250 strike price. So that's why I was like, you know what? There's still some really good upside potential here annually. Plus the cash flow is unbelievable for growth potential here. And so I want to know what the 250 strike price to get assigned at, just in case that happened as a result. And obviously that did not happen. We made $715, which is absolutely amazing. So adding that in there definitely helps out. And the last one that we know of is BABA. Now we did 2 BABA trades here because on the Super Micro Day last Friday, we also did an Alibaba one as well. And you'll see that because it comes in also on May 9th. May 9th, sold this one here. Market pumps up. We bought it back for $21. Made about $100 there, about $98, I believe. $98 there as well, which is absolutely awesome. So again, we have CVS. We made like, $80, $75 or whatever it is. Super Micro made another $50. This one made another $90. United Healthcare, the big hitter at $707. And we opened up another BABA one after earnings because their earnings came down. Even though they had good earnings in this case, I think it's just more of, fear and uncertainty that happens in the market. It's not good enough. Comes down, sold another cash secured put at 116. And as you will see with the spreadsheet here, again, intrinsic value 1 year is at $119. And I'm looking at saying, hey, give me a sign at 116. 3% return for the 1 year potential, 15 for the 3 year annualized, 21 for the 5 year annualized. And then also taking a look at their gross for just everything, and the discounted cash flow is absolutely amazing. So not too worried if I get assigned at 116. But right now, as you will see, if we go back to BABA here, as you will see, this contract is already about $40 out of the 125. So if it comes up Monday morning, tomorrow morning, great. If it doesn't, no big deal. We have a long date here till not a long day, but about 2 weeks or so, which is absolutely fine. And then we'll kind of just manage the position and see how it goes from there. Now, the reason why this is great is because, again, we made 1.93%, made almost 2% in the week. S&P made 3%. Okay, so we're short about 1.2% on the week. Fine. But the difference is that this allows me to be in and out of my cash positions pretty quickly. Because now with me closing all these trades off here, I'm now sitting back in at $38,000 cash, majority cash still I can get that 4% interest, which right now I've made about $70 this month already, which is absolutely awesome. So I'm still getting that cash return as a result. And also, I mean, who knows what's going to happen over a weekend with a Donald Trump tweet, with any kind of news break. For example, we had the credit downgrade that happened right after market close, and we got this big sell-off here. So technically SPY was down for the day about 0.36% because of the after-hour market, and the market sold off after Moody's downgrades the credit rating of the U.S. from AAA to AA+. So the market kind of sells off with this kind of news break, right? And who knows how the market's going to open tomorrow. Now, hopefully the market opens red tomorrow for an extent, because then I can open up, I can deploy more of my cash that we have here. So again, right now, only about 11,000 is in cash right now because of Alibaba here. But rather than that, majority sitting in cash in this case here. And what I will say is, even though I will, again, fully admit that I was wrong in terms of thinking that we're going lower, and we did go lower until the crazy news and the market went up 10%, and then we had the pause in China tariffs and everything else. Even though I was wrong in terms of saying that we are going to be, coming down lower so far, obviously time will tell as time goes on here. I will say I'm happy with my returns in the last month here. With trading stocks and trading options consistently, it still underperforms the S&P because S&P has had a huge recovery. But over the last month, being up 4.42%, what this is doing for me is that it's building my confidence back up as investors, as a trader, and as knowing when can I take profits and when can I not. So the fact that I'm up 4.42%, literally just trading options, to me is good. You could see that when I sold off down here. I was down about 20% on the portfolio, which was, again, obviously a crazy idea. That's Liberation Day. And then ever since then, we're now up, again, about 4.4% or so. So, and, ever since that, from April till May, I'm happy with that. I'm starting to recover the portfolio. I'm building that confidence up here. And even though I was wrong, who knows what's going to happen over the next couple of weeks, couple of months, in the economy that we have overall here. Still seeing a lot of cash in this portfolio here, but again, $1,000 a week. Can't complain about making $1,000 in a week, right? That's $4,000 a month. That's $48,000 a year in theory, which is not going to be obviously guaranteed to be happening in this case here. But the fact that I made $1,000 in a week was absolutely awesome. So just giving you guys a little bit of an insight, the trades we're looking at, Alibaba, we had Super Microcomputers, we had CVS and United Healthcare, which is the big hitter at $700 there. So thank you guys so much for watching today's video. If you made this from the video, feel free to like the video, subscribe to the channel if you've not already done so, and turn on the bell notifications. As always, I'm going to be updating the spreadsheet more and more with some new cool things, so be on the lookout for that as well. So thank you guys so much for watching. I hope you're making money in the market in some way, shape, or form. And hopefully we have an update in the future saying we are up, another $1,000 or $2,000 on the week. So again, thank you guys so much. And as always, I will see you in the next video.